This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Middle of the week, it's a Wednesday morning. We are coming to you as always from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel. Well, it's been stable, right, in the markets for the last couple of days. And this morning as well, Wall Street continued its rally. So let's see which way things go.
Well, things looking up this morning, so let's get straight to the action.
Absolutely. And I think the US is the one which is undergoing some repair after last week's sharp correction. And I think that gives us some legs this morning, at least at the word go. Last week was pretty poor, the worst week, I think, in a long time. On Monday, the US market recovered. Last night as well, there was a 1% odd recovery. So it's a hesitant kind of a recovery, I have to say, because it's not as if, other parts of, it's not a sort of all-round kind of a at once firing. But it's recovery nevertheless. So, the US equity market continues to slowly regain its confidence. So maybe the best way to put it. As strong PMIs globally are giving a bit of a boost to equities. And it's not just the US, but we got PMI numbers from around the world, different parts of the world. So as a result, S&P was up about 1.25%. NASDAQ was up about 1.6%. The Russell 2000, which is the small cap part of that market, was up even better, 1.7%. Now, in the US, though, the chink in the armor, in that sense, if you look at the PMI number, is that the services employment component, that actually, and that is within the PMI, that fell to the lowest we've had since 2009 and the COVID period. That is worrying at the margin, and some are pointing to that number and saying, well, this is certainly indicative of the fact that the labor market and services inflation has been sticky. So anything which happens there is, people take notice and take it seriously. And this data is being meant to be seen by some, at least right now, that this is showing that things are perhaps going to slow down. It's not so far, but, one more of those data points which creates doubt. Now, the 10-year, it lost about 1 basis points, and this is what I'm saying, nothing at all, right? So 4.62, last 3 days we've been in this between 4.6 and 4.65%. Dollar index came off a little more substantially, so that lost about 0.4%. We're at about 105.68. Oil prices went up about 1.5%, and we're now back to about $88 per barrel. So this is the other sort of macro bit apart from equities. Tesla, which is, of course, watched pretty closely is the market leader, right? 50% share, and in the US, 20% globally. So clearly the leader. And it's been in trouble. EVs have been slowing down. Numbers came through, and there was a bit of this and that for everyone. If you wanted to be bullish, you could look at the numbers and feel bullish. If you wanted to be bearish, you could feel that as well. The stock, though, because it's lost quite a bit, 40% just this year, 45%, that recovered. I mean, after market hours, the stock was up 13%. The first quarter results, of course, in focus. We'll talk more about the numbers and what they said a little later as we go along. Just to kind of tie all of this back into what this may mean for the market here. So we've been, of course, having our very strong recovery here as well. The Nifty, though, it tried to close above the 61.8% retracement, but it finally failed. So it was actually a pretty meaningful retracement that we saw. We ended at 22,368. The 61.8 is 22,394. So it's right here. I mean, 30, 40 points, and we are there. So watch for a close above that level at the very outset. And then we'll sort of talk about higher levels. Gap area between 22,427 and 22,503 remains a resistance. We pointed out yesterday morning as well. And that actually did act as a bit of a weight and did not allow the market to go higher. But once this is cleared, you're basically looking at 22,775, which is the previous all-time high. And, if the market takes that out with some force, then you're looking at a fresh leg up. The support for the Nifty comes in at the 22,340 level. Again, these are very close by. So, that's a 20-day moving average. But if that goes, then you basically look at the 50, which is 22,000, I think 200 or so. Just under 22,200 is where the 50 days stands at. The Bank Nifty, once again, tried to close above the 61.8% retracement. That for the Nifty Bank is 48,111. We left off at 47,970. So again, for the Nifty Bank, that's the first level to take out. And near-term supports for the Nifty Bank. Look at the hourly average, the 20 hourly and the 40 hourly. That stands at 47,817. That's the first. And then you look at 47,730. So these are very near-term supports. So Nothing in the market, nothing in the setup from overnight would suggest that there's anything but for the fact that the market perhaps moves higher. But will it do in a forceful kind of a fashion, or will, after getting that gap up as the GIFT Nifty is showing, like yesterday, it once again starts to find retracement, because you're opening right into that gap area at the word go with that kind of open. Sonia.
Oh, absolutely. And the moot point is this, right? This is a market that's trending higher. Every dip is getting bought, and the best way perhaps to approach the market is to just stay invested. We're almost, we're heading towards all-time highs. There's nothing to suggest that we won't get there. So just to put some of the stats, right, the Nifty has been very stable around the 22,300 mark. There was large buying from domestic institutions yesterday. So DI has bought almost 3,000 crores in a single trading session. Wall Street has continued its rally as well, as we pointed out earlier. Asia is seeing very strong gains this morning. So look at the Japanese market. It's up. I think the last time I checked, Japan was up about 700 odd points. The Hong Kong market is up 230 points. So the going is very good. Now, there is a lot of buying from institutional investors. So the momentum continues on that front. Yesterday, in fact, there was broader market outperformance that we saw. The Nifty Midcap Index was up over 1%. That's how we closed yesterday. If you look at specific sectors, real estate is coming back into action. Cement is coming back. So there was good amount of buying that you saw in these two names. The Nifty is now moving towards that resistance level of 22,350 to 23,400. Now, if we get past this level, then, there's no looking back for the market. But the momentum is definitely on the upside. Also, the volatility index is now trading near all-time lows. So that's another thing to look out for. In terms of individual stocks, there are some result reactions which were not great, to be honest. Tata Consumer, mixed bag over there. The India business did well. About a 10.5% growth is what we saw. The other Tata Group company, Tata Elxsi, actually disappointed the street. So there was margin pressure. It was a weak quarter. So perhaps you could see some, a downtick on that stock as well. But apart from that, it's been a really strong market. There's no reason to suggest that, there could be a big correction or anything. In fact, small dips here and there are consistently being used as buying opportunities, and I don't see that trend changing.
Well, that's right. Sonia, the cues are looking positive this morning. So global setup itself is good. The markets ended higher. You have dollar index as well as yields that are lower. So the global setup is fairly positive. Well, in yesterday's trading session, the Nifty did well, but towards the end of trade, we did see some selling because the Nifty Financial Services Index did play out expiry. However, the crucial resistance zone comes up for you on the screen. And yesterday, we had the Nifty Financial Services Index that played out expiry. Today, all eyes will be on the Nifty Bank because that one has its weekly expiry as well. What do the FIs do? Not too much in the F&O market. On the index futures, they added some longs as well as shorts. They continue to remain net short with close to around 66% of their positions on the short side. And in absolute terms, it's around 1.09 lakh contracts. So, that's about the FI's positioning. And they continue to remain net short, which in fact is a good sign, I would say. The VIX, that was the highlight of yesterday. It cracked close to around 20%. That's the most we've seen in multiple years. And the question is, are we bracing ourselves for a big rally from here on? Or the other factors, are we getting a little bit too complacent? Is complacency setting in? Well, I would lean more towards a rally because now, in fact, the market seems to be factoring in some positives. And ahead of the elections, you normally see a bit of a rally. Part of the reason could be some of those out-of-the-money puts that were bought, well, they got unwound in trade yesterday. So some of those come up for you on the screen. And between them, if you look at it, well, close to around 45 lakh shares did get unwound on the put side. The call writing continues. Remember, we have expiry, the big monthly expiry that plays out tomorrow. And there is still writing we're seeing at around 22,500 call, 22,400 call as well. So fair bit of addition out there. Which brings us to the levels. On the upside, the 22,500, 22,550, that seems to be the near-term resistance. Going by the options data and the technical level that I've put up for you on the screen, 22,150, 22,200, that's going to be the crucial support zone. This is just in the near term. The Nifty Bank as well, last couple of days, HDFC Bank hasn't performed. And yet the Nifty has ended higher. You'll need some kind of stability coming in out there. And those are the crucial levels we're looking at. Resistance comes in at around 48,500. Yesterday, we went to 48,300. We did a U-turn. And near-term support at around the 20 DMA odd. I'm looking at two stocks. One is Tata Elxsi. Well, they delivered a negative growth. The street was bracing. JP Morgan was expecting a growth. They delivered a degrowth. Stock trades at around 40 times. So we've seen in the past when valuations are elevated and the numbers are a little bit disappointing, the stock pulls back. So I'll be interested to see how this one moves. The other one I'm looking at is MOIL. Yesterday, the metal index took a bit of a breather, but MOIL was one of the big moving stocks in trade. And the volumes are the highest we have seen since November 2023. Delivery was the highest we've seen in the last 3.5 months or so. So massive delivery is what we saw out there. And yesterday, you saw more than 30 lakh shares getting delivered. The average has been less than 10 lakh odd. Few triggers that could play out. Manganese ore prices itself are moving up. There's a bit of a supply glut because the Australian mine has, got hampered. So there is a bit of a supply glut. And manganese ore prices have moved up. So maybe the street is bracing for another price increase that comes about. So I'll be watching both these two stocks. But the GIFT Nifty starts in the green. We'll need to build on from there on.
Okay, thanks a lot for that. So let's see, the implied opening is suggesting an 80-point up move. This is really a momentum-driven market, and perhaps we can build on to our gains today. Let us get you some opinion from Lawrence Blanco of CLSA, who says that the NSE Mid-Cap Index is currently consolidating below that 49,350 to 50,730 mark, following an 8 to 9% correction of the February highs. He says the Nifty has been a bit more resilient, but here too price action has traced out a choppy, volatile pattern of marginally new highs, followed by short, sharp reversals. He said it would take a break to new highs with momentum confirmation to provide a fresh momentum buy signal. Until then, he says, we should anticipate further volatility and a likely re-break of the 50-day moving average.
Well, let's get you some money market views now. This is Pankaj Chitangia of First Basis, who says that the US 2-year and the 10-year rates are seeing difficulty in maintaining high levels. He also adds that continued RBI intervention, anticipated large inflows and receding oil prices will keep a lid on INR weakening against the USD. He expects the USD INR to gradually decline towards 83.24 to the dollar, with resistance at 83.36 to the dollar for the day. Through the week as well, he says the USD INR is likely to trade with critical support at 83.15 and resistance at 83.48 to the dollar.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says the yields hardened during the week, tracking a risk-off sentiment as Israel-Iran tension escalated and crude oil prices jumped. However, he says the 10-year benchmark yield took support near 7.24% and retraced the entire up move, closing the week around 7.16%. He adds the MPC minutes reiterated caution about food inflation and external contingencies. He also says US Treasuries remained elevated post strong inflation and other economic data. He expects the 10-year benchmark to trade in a range of 7.14 to 7.24%, tracking Iran-Israel tensions and crude oil prices.
Okay, well, plenty to track in terms of stock specific action today. We'll highlight all of them in our top 10 segment. For the time being, we run you through the list. We're looking at 361 WAM, Cyan DLM, MCX, Craftsman Automation, Sudarshan Chemicals, and Lupin. All of them will be reacting to positive news flow. On the flip side, Tata Consumer, Tata Elxsi, ICICI Prudential, as well as Nelco will be reacting to negative news flow.